Welcome to the Deep Dive. We cut through the noise to get you informed fast. Today, we're plunging into Avalanche AVAX. It's one of those fascinating cryptos. Is it that hidden gem building the future? Or maybe, just maybe, in this crazy competitive landscape, is the one that got away? We're going to try and figure that out.
Yeah, and to do that, we've pulled together quite a mix of sources. We've got the official technical docs on the AVX token itself, detailed market analyses, price predictions, the works, and also, crucially, updates on their strategic roadmap, partnerships, all the recent stuff.
Okay, so our mission today is pretty clear. Let's unpack what makes AVX different and, unique, look at its recent performance, what's driving that, check out their future plans, which sound pretty ambitious, and also weigh the challenges, give you that full picture, quick and clear.
Let's do it good.
So let's start right at the beginning. AVX, at its core, how should people think about it? What's its main job in the Avalanche world?
Right, so fundamentally, AVAX is the native utility token for the Avalanche primary network. It's kind of the fuel for the whole ecosystem. And the really key thing to grasp is its scarcity. It's hard capped. Maximum supply, 720 million tokens, ever. That design choice is pretty significant.
Okay, hard capped. And utility, what are the main ways you actually use AVX day-to-day on the network?
Well, it does a few critical things. First, you use it to pay transaction fees, the gas fees. Second, it's vital for securing the whole platform through staking. We can get more into staking later. And third, it acts as a basic unit of account across all the different blockchains built on Avalanche. It has multiple layer ones.
And those transaction fees, there's something pretty interesting about how Avalanche handles those, isn't there?
Yes, exactly. This is a really unique aspect. Those fees, they get burned, permanently removed from supply.
Burned. So gone forever.
Gone forever. It's not just some accounting trick, it's a built-in deflationary pressure. As the network gets busier, more fees are paid, more AVX gets burned, which, theoretically increases scarcity, potentially value. It benefits the long-term holders.
Okay, so burning tackles scarcity. But you mentioned utility goes deeper. It plays a role in governing the network, too. How does AVX factor into decisions?
It does. AVX basically represents the weight a validator node has in the proof-of-stake system, the POS system. So the more AVX you stake as a validator, the more influence you have. But it's designed so power stays decentralized. No single person or group owns Avalanche. Validators earn rewards based on their staked AVX, so their incentives are aligned with keeping the network healthy and secure.
Right, aligns incentives. Now let's shift gears a bit to the tech underneath it all. Avalanche's architecture is, it's different.
It really is. It uses a DAG-optimized consensus mechanism. DAG stands for Directed Acyclic Graph. So instead of a single chain of blocks, think of it more like a web, where transactions can be confirmed in parallel. It's built for speed, high throughput, high scalability, really important for avoiding those network jams you see elsewhere.
Okay, DAG for speed. And this next bit is where it gets really interesting for me, the 3 different blockchains. How does that work without just making things super complicated?
Yeah, it sounds complex, but it's actually quite elegant. You've got 3 core interoperable chains: the X chain, P chain, and C chain.
X, P, and C.
Right. Exchange chain. X chain is for creating and trading assets. Platform chain, P chain, coordinates the validators and manages the subnets, these custom blockchains.
Okay.
And the contract chain, C chain, is where the smart contracts and DeFi apps live. It's compatible with Ethereum's tools, which is a big plus for developers.
So specialization, like different departments handling different tasks.
Exactly. It prevents bottlenecks. By splitting the workload, Avalanche can handle a lot more, much faster than if everything was crammed onto one chain.
That architecture sounds like a real edge. And they're not standing still, right? You mentioned the 2025 roadmap announced earlier this year. What are the highlights there?
Yeah, the February roadmap was packed. There's the Etna upgrade, focusing on performance tweaks, network optimization. Also, they're rebranding subnets to operate as Avalanche Layer 1s.
Subnets becoming Layer 1s, what does that actually mean for users or developers?
It emphasizes their independence and power. A subnet is basically your own custom blockchain on Avalanche, tailored for a specific need, maybe with its own rules, its own token even. Calling them Layer 1s highlights that they're sovereign chains within the ecosystem, offering huge flexibility. You can build exactly what you need without messing with the main network's core rules, but still benefiting from its security and interoperability.
Okay, more flexibility. What else?
Big gas price reductions planned for the C chain and for deploying these L1s. That's always welcome. A new dedicated developer platform, build.avax.network. And a multi-grants program to pump funding into new projects. Lots of focus on growth.
definitely sounds like they're building for the future. And are there any really big leaps in tech on the horizon?
Well, they're talking about Avalanche Network 3.0.
Right.
The headline feature there is sub-second transaction finality.
Sub-second. Wow.
Yeah, basically making transactions feel instantaneous. That would be a game changer.
And it's not just pure blockchain tech, is it? They're bringing in AI, too.
That's right. There's the InfraBUID LAI fund. That's a $100 million fund specifically for AI integrations on the infrastructure level, and support for projects like Kite AI, which uses AI for things like data processing and scaling the network. It shows they're thinking about how these technologies can work together.
Interesting. And what about connecting to the rest of the crypto world? Interoperability.
Yep. Ongoing work there too. Improving blockchain bridges, making it easier to move assets between Avalanche and other networks. Plus, they're stepping up education campaigns, trying to bring more people into the fold, make blockchain less intimidating. Crucial for adoption.
Okay, let's switch tracks slightly to AVX tokenomics. How the tokens actually work. You mentioned new ones are created.
Right. So 360 million AVX were created at the start, at Genesis. But new AVX is constantly minted as rewards for validators, for doing their job correctly and staking their tokens. This minting helps offset the AVX that gets burned from transaction fees.
Ah, so it's a balance, minting versus burning.
Exactly. So even though it's heading towards that hard cap, the mechanism means it's usually slightly inflationary in terms of new tokens being added, although the burn provides that counter pressure.
Now, validator behavior. Lots of networks use slashing, taking away staked tokens if a validator misbehaves. But Avalanche doesn't do that.
No, they don't use slashing. Their approach is different. They basically make bad behavior really expensive and unrewarding. If you try to act maliciously, you expend a ton of resources, computing power, but you get zero reward for it, so you just waste your money. It disincentivizes attacks by making them economically irrational.
Interesting. A different kind of deterrent. And how do they encourage validators to stick around long-term, the staking incentives?
Yeah, the incentives are structured cleverly. If you stake your AVX for the maximum duration, which is a full year, 52 weeks, you actually earn a higher rate of return. Specifically, it leads to about 11.11% more tokens being minted as rewards compared to just staking for the minimum 2 weeks.
So it directly pays more to lock up your tokens for longer.
Precisely. It encourages long-term commitment, which adds stability and security to the network.
But just to hammer this home, despite the minting, that hard cap is absolute.
Absolutely. The underlying math guarantees it. The total supply of AVX will never, ever go above 720 million tokens. That ceiling is firm.
Okay, solid tech, interesting tokenomics. But how's it actually doing in the market? Let's get into the recent performance and strategic moves. What's happening now?
Well, as of today, July 22nd, 2025, AVAX is trading around $25.14 to $25.73, give or take. And it's had a really strong run lately, up over 20% in the last week and almost 50% in the past month.
Wow, 50% in a month.
Yeah, significant momentum. Its market cap is over $10.6 billion now, ranking at number 16 overall in crypto. And the Fear and Greed Index, it's sitting at 72, which is firmly in greed territory, suggests strong positive sentiment right now.
Okay, that's some serious upward movement. What's behind it? I remember back in April 2024, there were some big partnership announcements.
Definitely key drivers. The Amazon Web Services AWS partnership was huge. Basically allows businesses, institutions, even governments to deploy Avalanche nodes or their own custom subnets with just one click through the AWS marketplace.
So it makes it way easier for big players to actually use Avalanche.
Exactly. Lowers the technical barrier massively. A major step for getting blockchain into the mainstream enterprise world.
And wasn't there another big one linking up with traditional finance?
Yes, the JP Morgan partnership. That's under their Onyx platform work. They're focusing on tokenizing real-world assets, exploring how blockchain can make asset management more efficient, transparent, secure. Having a name like JP Morgan collaborating is a massive validation for Avalanche's tech, especially for institutional adoption. It's about bridging TradFi and DeFi.
Huge validation. And beyond the big names, the ecosystem itself is just growing rapidly.
It really is. They're planning to launch over 80 new subnets. They already have around 20.
80 more.
Yeah. This means tons more specialized blockchains for specific industries or applications. It's a strategy of really diversifying what Avalanche can do.
And maybe on a lighter note, they've even embraced things like meme coins, right? Like Kakinu.
Yeah. It might seem less serious, but it's actually smart. It boosts user engagement, brings more activity onto the network, and shows Avalanche is versatile enough to handle all sorts of crypto assets, not just the serious ones. Shows they're adaptable.
Makes sense. So bringing it right up to today, July 22nd, you mentioned positive sentiment. Are there specific market data points backing that up?
Absolutely. Avalanche's open interest, that's the OI, tracking derivative contracts, basically indicating new money coming in, hit a new all-time high recently, almost $796 million.
A record high.
Yeah, it signals a lot of new capital and speculative interest flowing into AVAX. Yeah. Also, the total value locked, or TVL, the amount of assets locked in DeFi protocols on Avalanche, has climbed steadily to $1.93 billion. Those are levels we haven't seen since way back in September 2022. Shows growing usage and confidence in the ecosystem.
And network activity itself.
Big surge there, too. Processing around 600,000 blocks daily. That's a sharp increase from just a few years ago, showing the network is handling much more traffic.
Okay, so lots of positive signals. But what about the technical charts? What are they telling us? Sounds like maybe a mixed picture.
It is a bit mixed, which is typical in crypto. If you look at short-term charts, like the 4-hour, things look bullish. Moving averages are pointing up. But zoom out to the daily and weekly charts, and the moving averages are actually trending down. That suggests some caution might be needed for longer-term positions.
Okay. What about indicators like RSI or AMCADE?
Right, the Daily Relative Strength Index, RSI, is at 78. That's high. Technically, it means overbought, which can sometimes signal a pullback is due, but it definitely shows strong upward momentum right now. And the MACD indicator is showing a bullish crossover, which usually reinforces positive price trends. But then again, back in June, some analysis pointed out a double bottom pattern forming near $19.97 support.
Double bottom, that's usually bullish, right? Suggests a potential reversal upwards.
Often, yes. It hinted the price might have found a floor, even while other indicators were maybe more neutral at that exact moment. So yeah, the technical picture has conflicting signals depending on the time frame you look at. It's complex.
Definitely complex. And that leads us to price predictions. Always tricky, always volatile. What's the range people are talking about for AVX? Acknowledging the uncertainty, of course.
Absolutely. Crystal balls are cloudy in crypto. For the very near term, like July, August 2025, some forecasts see minor ups and downs around the current price, maybe small dips, then small rises. Looking out to the rest of 2025, big variation. Some predictions stay pretty conservative, maybe $20 to $28. Others are much more bullish. An average prediction around $47 by December 2025 is out there. That'd be like a 130% jump from where it was in June.
Quite a range. What about longer term?
Longer term gets even wilder. Naturally, average expert projections hover around $48 for 2026, maybe $69 for 2027. Wallet investors notably optimistic, calling for $240 by 2027.
$240.
Yeah. And then you see forecasts stretching out to 2030 around $200 and even, well, into the tens of thousands by 2040 and 2050, like averages of $17,000, $22,000.
Okay, those seem extremely speculative that far out.
Extremely. You have to take those very, very long-term predictions with a massive grain of salt. The crypto space changes so fast.
Understood. So lots of potential upside baked into some forecasts, but we need to balance this. What are the main things that could realistically hold AVX back? What are the big challenges?
Number one is definitely the competition. The layer one space is brutal. You've got Ethereum constantly upgrading, trying to solve its own scaling issues. You've got Solana, known for its raw speed, and new innovative platforms are popping up all the time. It's incredibly crowded.
So even with great tech, just getting noticed and adopted is tough.
Exactly. Adoption challenges are key. Avalanche needs to keep bringing in developers, keep bringing in users, building out those dApps and subnets faster than the competition. Attracting and keeping that momentum is a constant battle.
And then there's just the general market sentiment, right? Sometimes the best tech doesn't win if the market decides to favor something else for whatever reason.
Precisely. Market sentiment is fickle. Technical superiority doesn't automatically equal market dominance. You need the tech, the adoption, and the narrative to align.
So wrapping things up.
Well, connecting it all, you'd have to say Avalanche has a really solid innovative foundation. That three-chain architecture is clever. The ecosystem is definitely growing. The roadmap is aggressive. Those partnerships with AWS and JP Morgan are significant. Strong fundamentals are there.
Right. So back to that first question. Hidden gem, or the one that got away, it's definitely still in the running, seems like. High stakes, high competition. So here's a final thought for you listening. Given everything we've discussed, that unique three-chain setup, the hard supply cap, the way it incentivizes long-term staking, how do you think Avalanche will actually navigate this fierce competition? What specific role could it carve out for itself, bridging traditional finance, maybe AI, and this decentralized future? Which part of its strategy or design do you think will be most crucial for its success down the road?